Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Gargi Chaudhuri joins us, Chief Investment and Portfolio Strategist for BlackRock, a small firm in New York. Gargi, I just got to cut to the chase. When somebody trots out, buy the dip, how does Gargi Chaudhuri buy the dip?
Good morning. It's great to be here. So a couple of things when we think about where investors should be focusing. First of all, we've talked about sort of the belly of the fixed income curve. I know we've spoken about this before, and that's certainly an area where we have seen a significant dip over the course of the last week or so. And with yields backing up pretty significantly on the back of some very strong economic data, we think that the income that fixed income markets provide are something to be, definitely taken into consideration and allocated to. If you're an equity investor, I think buying the dip, you haven't really got too many dips, but I certainly think that some of the dynamics of growth, the dynamics of FOMC being quite supportive to the economy, as well as the economy being very strong, all lead us to be pretty bullish.
Gargi, since you've been at BlackRock, have we had a legitimate market correction? I'm kidding.
Of course, I've been at BlackRock for 14 years. We've certainly had years like 2022 where, as it turned out in hindsight, amazing opportunity to own quality assets.
Well, Gargi, I have to ask you, it's great to have you on talking about bonds and really their ability to serve as a ballast for, global diversified portfolios. I just have to ask you this. High yield, we've seen spreads stay remarkably resilient through this cycle, and high yield has absolutely crushed it. Even just last week, we saw, a backup in IG, but we didn't see a backup in high yield. Talk to us about the resiliency of high yield credit.
Absolutely. So to your point, there's been this tug of war between the level of spreads and the all-in level of yields. So to your point, we haven't really seen that back up. Even in the period, forget about last week, but even in August, when we actually saw a meaningful pullback in risk assets, spreads did widen out, but gave all of that back very quickly. And there are some fundamental reasons behind that. I think in the high yield markets, if you look at negative net supply being something pretty meaningful, default rates remaining low, and very importantly, all in yields being extremely attractive. Investors are moving towards high yield in an active manner, in a defensive manner. We think that continues.
I just want to say with Gargi, we're going to stay with Gargi because it's too important a conversation. But in honor of my daughter playing Guitar Hero, we got a flange on Gargari's voice, just like Badge in the 60s.
Gargi, I want to stick with that theme of high yield credit. I want to extend that to the equity markets. They've historically done well during rate cutting cycles. But here's my question. Small caps. You've historically seen a correlation between small cap equities and U.S. high yield, but we just haven't seen that this time, at least from a total return perspective. Talk to us about when investors should be looking at building a position in RTY.
Yeah, so we think that right now isn't quite the time for small caps yet. And we've talked about this in our investment directions, our Q4 outlook, where we do think equities make a lot of sense. We do think that high quality equities, large cap value make a lot of sense, but staying away from small caps for a couple of reasons. Number one, mainly it's about earnings. With over 40% of small cap companies actually being in negative earnings territory, it is not quite yet the time to go into indexes that give you exposure to high yield. However, what we have seen in periods is investors buying upside protection. Call volumes in IWM is something that we keep an eye on. That is something that we've seen pick up in certain periods of time. I think that can be an area for investors to get that, that rental income, if you will, in small caps. But until we see a meaningful turn in earnings for small cap names, I think it's very hard to consider a sustained rally in small caps. Where we think there's more, there's a lot more opportunity for us, we believe, is certainly staying within value and cyclicals, but keeping it in large caps, where we think more of the earning growth is going to come in over the next couple of quarters.
Well, you talk about that yawning gap in earnings growth between technology and the rest, and I've read that about, I mean, it's just awesome stuff, Gargi, but the move in energy last week, I mean, off the back of what we're seeing in the Middle East, I think what did we see, like a 7-8% move in the S&P energy sub-index. I mean, massive. Like, talk to us about ExxonMobil, Chevron, and now we're starting to see some M&A activity there. Talk to us about that sector and its ability to kind of lead the market higher from here.
Yeah, absolutely. So I think, we obviously saw that move, and unfortunately that came behind some of the very tragic events in the Middle East. And we would never tell investors that they should only invest in any parts of the market based on geopolitical activity, because what we see over and over again is markets tend to, over the medium to the long term, look through geopolitical risk. Having said that, I do think even valuations, energy in a portfolio, we were talking about value just a little bit of time ago, owning sectors like energy within that value portion of your portfolio make a lot of sense. And I certainly think that one of the things that has happened in the last 2 years with the rally in the large cap, with the rally in the Magnificent Seven, many investors have fallen short of their allocation to value sectors of the market. They have less value in their portfolio than they think they do, just because of the way in which the market has rallied. So I think there is a catch up there. I think, based on valuations, energies have historically been very, very underpriced. But geopolitical is never the only reason to own an area of the market.
Gargi, thank you. Gargi Chaudhuri with us with BlackRock there with a flange going on. Jim Glassman was iconic at JPMorgan for original thinking on the American labor economy. His work on teenage unemployment was world class. And this is a folly, Damian. Absolutely. He's retired. Okay, he's not retired. He delivered to me this morning a 49-page PowerPoint. Who in God's name is retired and delivers a 49-page PhD Northwestern PowerPoint? Jim, great to have you back on the show. I'm just going to look back, Tom. Yeah, I'm going to look at one of your charts here. Aggregate hours worked. I'm sorry, we're beyond the pandemic. Is our labor economy beyond the pandemic?
I think so. It's pretty impressive, actually, how we've roped our way out of this. And employment has been growing about 25,000 more a month than it was for the previous cycle. Probably immigration is behind all of this, but I think what these numbers show us is that we're out of the woods. We're back in the groove and doing much better than people worried with the Fed doing what they were doing.
Open question: which is the most important chart out of 49 pages for Jim Glassman? Which is a part where you go, OMG?
I'll tell you, there's one. And that's the picture on how much of the pie goes to workers and the share of income that goes to workers. So you would think that if labor markets are so tight and you got people retiring, and you would think the wind would be at the back of the labor sector. But in fact, the share of income going to them has come down from before the pandemic. And really, it's been coming down for the last 25 years. And I think that tells you something really important about the dynamic that's playing out. It's all about technology and the changes in the U.S. economy. And it exposes a real weakness in the thought process in the economics community about the role of labor. We sort of came out of school with this idea that if labor markets are tight, that can be inflationary. But when you see what's going on and you think about all the changes going on in the economy, how competitive it's become, what's going on with technology, it's becoming more clear to me that we got this story backwards. It's really wages don't drive prices. It's more that prices are driving wages. And that picture tells you that if you worry about tight labor markets are not inflationary if the share of the pie going to workers is not really down.
Jim, you're no longer at JPMorgan, but my goodness, I listen to those guys every day, all day, every week. And Jay Barry just moved his call for 50 bips at the next meeting to 25 bips. Everybody's sort of reevaluating where terminal Fed funds are going to end at this cycle. My question to you is just how low will interest rates go here in the U.S.?
Yeah, I don't think, the reason we're backing off is because the labor market seems like it's doing better and people think, well, no, there's not going to be a case for making big moves down. I think none of us really knows where the neutral rate of the Fed funds rate is. My guess is the terminal rate's around 3%. If you ask most Fed people, I'll bet most of them will tell you that's where we should be in the long run, now that this inflation scare has really kind of disappeared. So I don't think it's about, I don't think, when you get the kind of data we're getting, it tells you there's no big rush to get there. But the debate about the Fed is not about today's economy or today's labor market. It's about where do you think they should be in the long run if they don't want to do trouble for the economy.
What you just heard there, folks, from Jim Glassman was an absolute tour de force of all that he is and the classic work with Professor Gordon at Northwestern years ago. So to pick up on Trichet and his famous word, the engineer from Lyon, Jim Glassman is diffuse. Does our technological miracle in a declining labor share, does that diffuse out to all Americans, or are we setting up a Luddite America out of the early 19th century?
Yeah, it doesn't diffuse to everybody, does it? Because this technology, the digital revolution, now the second wave here is AI. It's really, what it means is that more of the income is flowing through to the equity market, and anyone who holds a share. Now, everybody could hold shares of equity, but they don't. So I think it's the reason why you're seeing this widening in the income gap in the last 25 years, which is driving a lot of the politics of the country. And this is not just a U.S. phenomenon. It's happening everywhere.
Yeah.
I mean, we have to be concerned about it because when you live in a democracy, everybody has a say. And if not everybody's on board, then you can get calls for policies that don't necessarily help you, but they just are crying for help.
Jim, I love that you mentioned prices lead wages there. And this regime shift, whereas the Fed sort of focus shifted from growth to inflation, is quite real and had negative implications for U.S. rest of world yield differentials and the like. How do you look at this market? How do you look at, this sort of shifting beta regime, one where the Fed is focused on inflation to one that is focused on growth? Does that have any legs to it?
Yeah, although I think for the equity market and valuation, I don't think the Fed is really the issue. It is in the short term, but frankly, what matters for the equity market is do these valuations make sense given what's going on? Well, I'll tell you, the one thing that the elephant in the room for me is if you look at profits over the past 100 years, prior to the millennium, after-tax profits averaged about 6% of GDP. After the late 1990s, the internet revolution, and now we've got the AI revolution, that share of after-tax profits going to is run up about from 6% to 10% or more. And we just got a stunning set of reports that come up within the last month. And I think it tells you there's something real going on. Everybody's been telling me, don't get crazy about this because everything reverts to normal. I don't know where the normal is. It's not where we were. It's a new place, and I think that's a footprint of the technology.
All right, Jim Glassman, let's do it monthly. Just hugely valuable. Dr. Glassman, now Asian. Jim, quickly here, Padres or Dodgers?
Well, you have to go with it's all about the laundry, isn't it? I'm in LA, so it's got to be about the Dodgers.
Okay. Well, we'll have to see. Last night was not there.
Not there.
To say the least. Dr. Glassman, thank you so much. I think this may be the conversation of the day. Henrietta Treyz with us. She's a grizzled veteran of the Capitol Wars with Veda Partners. Love having her on. Have her on 5 days a week. Do something about that, Giuseppe's father. Let's get Henrietta on 5 days a week. Henrietta, Nate Cohn has a fabulous article in the New York Times on polling. And there's two polls. There's regular polls like Bloomberg's wonderful poll, what we've got on New York Times, CNN, that. And then there's other polls where they say, how'd you vote 4 years ago? And there's some real mathematical gyrations Nate Cohn goes through. Do you look at the polls, Henrietta Treyz?
Oof, I sure do, all day, every day, whether I like it or not. I am right there neck deep in the polls all day. Nate Cohn is excellent to follow. I think he, like me, is in the position where we have to talk about some new angle every single day, if we can, about polls that are telling us a really consistent story, which is that this is a really close race. You want to drill down into really key segments. Right. I think we're all sweating the small stuff right now.
How does former President Trump increase turnout?
Well, you have Elon Musk tweet that today is the last day to vote in Georgia and other states, register to vote rather in Georgia and other states. So that's one way. Go directly to the young male audience, which is where Trump has seen so much of his growth in the last year. They are focused on the young Black male audience, young Latino male audience, and it's really a notable gender divide gap where Trump is sticking right with turnout in those core demographics. He is increasingly getting focused on and maintaining focus on sort of this dark narrative, America in decline, immigration as a major negative in the United States. And that's geared towards turning out a very specific set of groups. The risk is that it alienates sort of suburban voters, married voters in the suburbs of states nationwide in these critical swing states.
Henrietta, you mentioned Georgia. I'd like to broaden that perspective out a bit and talk about the 7 swing states. Is it still Roe v. Wade? I mean, what do the polls tell you? I mean, do they suggest that national security, on the border is an issue? What do they think about what's going on in the Middle East also?
Yeah, I've been saying this for months now, but this race is immigration versus abortion, hence the gender divide. Not that either of those issues are gender biased, but that's the way it's shaped up. So if you ask Republicans what the number one issue is, overwhelmingly they say it's immigration and the southern border and crime. On the Democratic side, if you ask them what the number one issue is, it's abortion. The negative for Trump is that it used to be economy and inflation, which would give voters 2 reasons to vote for Donald Trump. But since Harris has gotten on the scene on August 3rd, polls have never gone back and she's been improving. And now in some cases, polls are finding her ahead of Donald Trump on both the economy and inflation. So his negative is that he's lost the economy argument, which is really remarkable given we had the first bout of inflation in the United States for 40 years on Biden's tenure with Harris. So I think that's something that the Trump team in focusing on immigration has really diluted substantially. And so abortion is what the Democrats are voting on. And that's in key races, Montana, right, Florida, Nevada, et cetera.
Henrietta, it's been 1 year to the date since you speak about borders, Hamas crossing the border into Israel. I just want to ask your opinion on this. Harris, Trump, do you think there's any possibility that one or the other could, kind of sanction Israel in terms of, limiting the amount of arms being shipped to them if either one of them are in office? Is that even a distinct possibility here?
Oh, definitely. As you know, Biden was able to restrict arms back in May, if I'm not mistaken. So it's something that the administration can do. But when I speak with third-party voters, when I speak with folks who are mostly concerned about the war in the Middle East, a big piece of this is that the appropriations bills continue to go out and Congress remains overwhelmingly supportive of Israel. So whether the president wants to stop arms or not, a lot of these decisions are not up to him. The sheer volume of dollars, continued emergency appropriations bills, which we'll get again in December, are going to have tens of billions for Israel and for Ukraine and other emergencies like the FEMA disasters in the South right now.
I'm seeing that. We had someone in here the other day shrinking the undecided down to 3%. And I actually saw something this weekend, Henrietta Treyz, agreeing with that. Is it really that? Is it really that few undecideds?
Yes, it is. 3-4% is about as big as you can get. If you can go into certain states and find 11% now, it's sort of a Christmas miracle. People have made their decision, and the undecided voters are most likely going to be folks that just don't go out, that just don't vote on November 5th.
Well, they don't vote. So the
right.
bottom line is, well, let me ask the same question. How is Vice President Harris getting the turnout?
Well, I think you could see from today, for example, to keep it on the Middle East, you had 25 imams that came out and said, we are endorsing Kamala Harris. Those are across sort of key swing states in Philadelphia, New York. Any pockets where you might have concern, the 700,000 Muslim population in the United States, 300,000 of which are in Michigan, really need to be given a good rationale to go and vote for the Democratic ticket and contrast what it might be for Republicans and Trump at the top of the ticket. So there's a lot of very niche campaigning going on that we usually don't see. Usually we see these broad appeals to huge swaths of the population. But both Trump and Harris are going sort of very micro right now.
Well, we know Biden's going to take a trip abroad here. I mean, anything you're expecting here on student loans and student loan relief ahead of his trip?
That's not even on the radar. Do you think that's a topic?
Well, I paid off my loans, but I'm curious. I mean, I definitely think it's a topic for households.
But Damian's brilliant here, Henrietta. Is all this side stuff like the SALT tax that Damian pays? I mean, you're paying $200,000
SALT taxes, student loans, these are real issues. Henrietta, tell us about
real
this.
Issues, Henrietta, but are they real issues now?
I'm sorry. I have to say, I love SALT all day, every day. I talk about it all the time. I mean, this is a $1.2 trillion revenue raiser. That's not small beans.
Student loans?
Student loans is also a really big deal. I think the fact that we're even saying those words, though, is something that helps the Biden narrative or the Harris narrative. But to be fair, and I think to the broader point, Congress is out of session. They're not passing any legislation for the next month. None of this is happening. They won't even be back until about Thanksgiving. So to expect some massive influx is unrealistic. But certainly everybody's going to be jawboning. If you listen to the Call Her Daddy podcast or any of the others that are about to come up in this blitz the next week, both Trump and Harris are fully out there trying to appeal to whatever constituencies will have them right now.
Henrietta, go away. Henrietta Treyz, Veda Partners. We hope to see you again 8 times this week. There's so many topics here on economics, finance, investment, on fractured international relations. Oh, yes, an election here in a number of days. We weren't sure how to start the show, but you work around his schedule. Dan Williams, with a really interesting pedigree out of Oxford, was with the Jerusalem Post. We are thrilled that he gives us coverage at Bloomberg News. The last time we spoke to Mr. Williams was on the border of Lebanon. He comes from Jerusalem this morning. Dan, I looked at the Jerusalem Post this morning. The immediacy you see in the Israeli press, much different than in America. Is there any place in Israel safe in a 2-border war? From the 116 miles from Lebanon's southern border to the Gaza Strip, can anyone sleep in Israel safe at night from potential missile attack?
Well, I don't think you need my word for it. Good morning, everyone. You look at the map the Israeli military issued just 6 days ago when Iran launched 180 ballistic missiles in the direction of Israel. That is the latest front in this 7-front war. And the entire country was carpeted with alert signs. Basically, I think the Israelis knew where the Iranians were trying to hit. But what happens in a situation like that is the interceptions themselves become hazardous because ballistic missiles are fired at great height. They're intercepted at great height. And the debris is scattered a great distance. So even if you're out of range of Gaza, or you're out of range of Hezbollah from Lebanon, or you're out of range of, say, Iranian-backed militias in Iraq or Syria, or the Houthis in Yemen, you could still find yourself at the receiving end of debris from a successful interception. So that's a long answer. The short answer is no.
Dan Williams with us in Israel. Joining us this morning, Dan, is Damian Sassower. Damian?
Yeah, no, Dan, I need to know. We saw Bibi on the tape over the weekend specifically calling out French President Macron for, potentially recommending an arms embargo on Israel. I mean, is that real? And is there any chance that we could see other G7 nations follow suit?
We've been hearing subterranean rumors about this for quite a few months now. I have a good friend who's involved in the Belgian civil service. He told me this could be in the works some 6 months ago. The French foreign minister is now in town. In fact, he'll be briefing the press just an hour from now, so we'll be getting some clarification, I believe. But there have been indications denied by Germany and been indications that German export licenses have been delayed, that the Brits are more closely inspecting some defense export licenses to Israel. So yes, there is a slow gathering of pressure through the channels of defense exports to Israel as European nations try to figure out a way to apply pressure on Israel to cease fire without completely rupturing their ties with Israel.
Wow, Dan, how serious is that? I mean, Bibi specifically called out the axis of resistance in that speech and, specifically accused Emmanuel Macron of, being divisive and showing a lack of support, whereas the axis of resistance remains strong. Talk to us about the U.S. and their role. Talk to us about Kamala Harris, former President Trump. What's their stance on Israel?
Well, I'd suggest you pass the statements they put out on this anniversary day. Very strong statements in support of Israel by the president and the vice president. The vice president, Harris, in an interview, did reiterate her call for a ceasefire as soon as possible. That's pretty much a stock position of the Democratic establishment of this administration. The problem is it falls on deaf ears in Israel because Israel has been through several ceasefires, both with Hezbollah, with Hamas, I think at least 5 times with Hamas. And basically each ceasefire has seen reconstruction money, aid money coming in, and Hamas diverting a good deal of it to rebuilding its military capacity. And in the end of the day, Israel points out correctly that these are enemies backed by Iran, all of which are ideologically committed to its destruction, all of which openly say that when conditions allow, they'll resume the war against Israel until achieving that destruction of Israel. So Israel's position now, having undergone really an unprecedented attack on October 7th of last year, a game-changing attack, if you like. Israel is now changing the rules of the game, and it's saying no more ceasefires. We want victory. The question is, what does victory look like? No one has fully articulated that yet.
Dan, how has Netanyahu's popularity shifted? BBC has a nice summary of that, of a four-part, the different fractious parties in a parliamentary system. How has Netanyahu's popularity shifted?
His popularity has been in the doldrums for a year now, given this catastrophe, especially given that he is Israel's longest-serving prime minister and long cast himself as Mr. Security, the guy who can foresee threats to Israel and to the Jewish people. So he suffered badly in the polls. However, over the past month, Israel has clearly seized the initiative, specifically in Lebanon, with an audacious series of attacks, some claimed, some unclaimed. I'm sure you're aware of the beeper sabotage, the walkie-talkie sabotage, the cascade of precision strikes to effectively decapitate Hezbollah and degrade its missile capacity. So polls have indicated a lift for him, especially when compared to his likeliest rivals. However, the national religious bloc that he sits astride, and everything in Israel is coalition politics, is still not seen winning an election were one held today. He's not keen on seeing an election anytime soon.
Right.
The next one is scheduled for 2026. However, his personal approval rates are certainly improving.
Dan, thank you so much. Look forward to speaking to you again, reporting from Jerusalem for Bloomberg News. Dan Williams. Your daily look at the front pages of Lisa Mateo Hour. Once more on a Monday, ibkr.com/free PA. Lisa, what do you got?
All right, we've heard about cost cutting across the media industry, right? Entertainment divisions, trimming episode counts, reducing cast salaries. Well, now it could be affecting TV network news anchor salaries. Sources telling the Wall Street Journal, Disney's ABC, Good Morning America, George Stephanopoulos, Robin Roberts, Michael Strahan, they may be in this fight to keep their deals at where they are. They're about $25 million a year each. They say if NBC Today show Hoda Kotb, if she hadn't opted to leave, she would have faced a cut to her $20 million a year contract. So they're saying this whole cost cutting is starting to trickle down. MSNBC, you have talks of a new deal with Rachel Maddow, her $30 million per year deal up after the election. So we'll see what happens there. But they're just saying that the days of those media icons, it's coming to an end.
Right.
Like that's going to start.
Are you watching this stuff at home, or are you on YouTube like everybody else?
I was going to ask you to comment on this, Tom. We're talking about media icons here and what they're getting paid. No, but seriously, in all due respect, I have been getting a few calls from ABC and NBC. They really are hard up, I guess, if they're calling me. So, we'll see. But, I'm very happy here at Bloomberg, sitting next to Tom.
I by chance
collecting
saw
his
the
crumbs.
other day the ratings for the 6:30 news, the nightly news.
Yeah.
I'm making this up, 27 million 20 years ago, and they're now down to 18 million, 19 million.
It's a big difference.
So, it's a changing audience, but so much more, Lisa, I would say time has just marched on from Sarnoff in what Mr. Cronkite, Mr. Huntley, Mr. Brinkley, Frank McGee at ABC, what they invented, and then over to cable, we're just decades and decades and decades out. And it seems like the formula is changing.
Yeah, but Lisa, you look at these podcasts like Smartless, right? Bateman and Artnet. These guys are killing it, right? So you would think that Stephanopoulos and Michael Strahan, maybe all they got to do, Robin Roberts, all they got to do is start a little podcast.
Let me sell the book here so we can keep eating. YouTube is the future for us folks. Subscribe to Bloomberg Podcasts out on YouTube to keep Lisa Mateo in Costco. But the answer is, there's a newness to the YouTube thing that I'm dazzled by every day. What else do you have?
NFL teams, more of them heading to dome stadiums, and it's driving up the cost. Yeah, so the closed stadiums adds hundreds of millions of dollars construction costs. But here's the thing, not all fans want them. They enjoy the whole football field, being out in the cold. But it's not stopping. The proposals are coming in. 10 of the NFL's 32 teams currently play in those roof stadiums. That's an all-time high. Several more in the works. So more of them starting to come around. They're saying they want the year-round
On the
income.
schedule, Damian, are you advantaged by homing in a dome?
Well, here's the thing. The Bloomberg Business of Sports, we are going to have the pleasure in the next few weeks of getting John Fascitelli, who runs the real estate division, or used to run the real estate division, for Harris Blitzer Sports and Entertainment. He's going to be on our show, and he's going to tell us exactly what he's seeing in terms of this mixed-use real estate around these stadiums. And, of course, it's all about domes.
But
it's all about staying warm.
in your rotisserie league where you're in last place, in your rotisserie league, do you factor in if somebody has a dome as their home field?
Absolutely. A higher scoring game on turf. Yeah. Absolutely. You're looking for that. So, yes, absolutely. And I look at that, on a Saturday morning, probably just to make sure that that my lineup is set the right way.
What happened to the Seattles yesterday?
The Seattles?
Yeah, the Seattles.
The Seattles. Geno Smith, huh? He's something. Look, I picked him up in my fantasy league, in my rotisserie. He's I don't know if he delivered, though. I haven't really checked that this morning. But
oh, Mrs. Sassower has. You're doing the dishes tonight. Next.
Okay, Halloween season. You know those big 12-foot skeletons that all these people put on their lawns? Hate them or love them. The problem is that the owners are keeping them on their lawns for more than just the Halloween season. And now HOA letters are going out to these folks because they're saying, hey, you need to get this off your lawn. But the people who bought them for $300 are saying that, you know what, it took me a long time to put this up. So what they're doing is they're changing it. So after Halloween, they put a Santa hat on it, and they keep it through Christmas. Then they put a top hat and extend it to July for, 4th of July. They put it to Sam, a top hat on it.
Look, is there really like an understanding about when you're supposed to take your Halloween, your pumpkins away from your front door? Is it like, the day after, 2 days after, a week after?
I call it common courtesy. I hate when people have Christmas lights up in like February. Like you just can't do it. But they're saying that this is becoming a legal issue now. And so now, it's this whole fight about how long to keep them up. But their neighbors are saying it's bringing down their property values, and that's a problem.
Major issue.
See? So, especially in those HOA
got
regions.
One more?
The Joker. I don't know if did you guys see it this weekend?
Yeah, bomb.
It did. It didn't make as much as the first. Lady Gaga, Joaquin Phoenix. It's kind of this musical drama, so I don't know
Lucas
if
Shaw wrote it up, and he said, look, $200 million, this is the risk.
It is, and it made $40 million opening weekend domestically. If you look at what the first made, $96.2 million domestically that opening weekend.
Okay.
So a big difference.
Do you see how I'm not on my game this morning? Do you know
why
I'm not on the game?
What's going on?
The older offspring, cash flow, the middle child, Prada, they would have asked first. Afterthought doesn't even ask. She just gets my charge card, and all of a sudden I got Guitar Hero in the house.
Oh, did you play?
I have a no, I did not play. I have a 17-year-old going through, she goes, Mississippi Queen is such a good song. Do you have Guitar Hero in your house?
Well, I don't. My kids are, they're not really into that. They just TikTok all day. But here's the thing, now that you have box office receipts, tell us about this, Lisa, down 12% year over year. Yeah. What are we looking for? What movies are coming up in second? Gladiator 2, guys.
No,
Wicked. Those are some of the movies you got to keep an eye on.
There's no Barbenheimer. I know. Yeah. So that's a struggle.
Gladiator 2.
Lisa Mateo, thank you for the newspaper.
Amazing.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.